Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video, I'm going to take you through the week ahead analysis. We're going to go over some of the news this week, as well as some charts to watch. So let's jump straight into it then. We've got some data out of China early Monday, which is the quarterly GDP figures, set to rise from 4.5% to 7.1%. This could benefit the Australian dollar, so we could see risk currencies like the Australian dollar perform better going into the early hours of tomorrow. We've got the Oz monetary policy meeting minutes as well, so they're going to be pretty interesting to keep our eyes on. But we also have some further data out of Canada. We've got CPI month on month, as well as median CPI year on year and trimmed CPI year on year, all looking to come in at a little bit lower than previous. US core retail sales and retail sales also looking to come in a little bit hotter actually than the previous, which could be quite interesting. An uptake or an uptick in retail sales data can signify an increase in consumer spending, which can be a driving factor of the US economy and of course inflation. So although inflation dropped quite considerably, there's a little bit of a potential here for this to suggest maybe otherwise. Now, we also have CPI data out of New Zealand, quarter on quarter, looking to drop from 1.2% to 0.9%. We also then have CPI data out of the UK, suggesting that we're going to see a drop from 8.7% to 8.2% year on year. We finished the week off with some unemployment data out of Australia and the US. Going on to the strength meter then, what are the most notable changes in the currencies? Well, we can see that the Swiss franc has gone from -1 to +5, so that's a change of 6. The yen has gone from -5 to -2, so bullishness in the yen and the Swiss franc at the moment. Dollar is a currency that is underperforming, gone from 2 to -2. Going on to the dollar index, we can see why that dollar has moved significantly then. We've traded through this key prior year low of the 101, and it looks like we're going to be extending that downward pressure potentially down to the 99 handle. We may see price just pull back this week. We've got obviously that data, kind of the high impact data that is coming out is not necessarily a lot of data. So usually in weeks when there's not a lot of driving factors in the market, we can see a little bit of retracement phases from previous weeks, and obviously we've had quite an aggressive move to the downside. So if we were to see that little bit of a pullback, we may see price head back to the 101 handle before either continuing to the downside. Alternatively, if price does just continue lower, $99 is going to be the point of interest. Going on to dollar yen then, so we can see that we've traded through the 140 spot 50 handle. We've traded through multiple trendline supports as well. We did find support at the 137 spot 50, which were these highs and this kind of low in here of previous area of support. So if we were to see that, we may see a move back to 140 spot 50 before seeing a continuation move. Alternatively, like I said, if the dollar continues to get weaker, we could break 137 spot 50, which could then see price continue to the downside. Kiwi dollar is an interesting market from a weekly perspective, only from a technical point of view, in terms of we've got a rally to the upside. The market has then consolidated. Kind of looks to me like we've got a higher time frame flag pattern, with the sort of bottom being the 0 spot 61 handle. Now we've broken out of that, it could be quite interesting to see if we get a bit of a pullback this week before seeing a continuation. And if we do, does it go and reach the 0 spot 65 handle? Or if it trades through that, does that mean we're going to be heading to sort of the 0 spot 7 handle? I imagine if we were to measure this up and then copy and paste it to the low there, we would be in and around that 0 spot 7 as potential targets. So from a technical perspective, that's what technical traders may envision happening for New Zealand US dollar on this weekly time frame. Finally then, cable. We've been loving this upward trend that's been forming on cable recently, and it looks like this isn't going to change anytime soon, considering the dollar is continuing to remain weak. Although CPI figures are expected to come in lower for the pound or for the UK, we could see a little bit of a pullback continuation this week as well. Looks like price is broken through and trading through 1 spot 3 handle. Next resistance is the 1 spot 32 handle, and above that we have the 1 spot 36 25. Below that, we've got the previous highs at 1.29. We also have the 1.2650 as support too. So although we're kind of trading above that 1.3, if anything were to happen, we may see price return back to prior highs. Thanks for watching this video update. I hope you enjoyed it. If you did, leave it a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content. I'll speak to you in the next video.